Hello and welcome back. Another video. Hope everyone is doing well. This time quickly recapping the Australian dollar against the US dollar. I'll quickly read out the call that was sent out in the WhyTrade Platinum group. Here the call was sent out. We have Aussie dollar currently running at a price of 0.6935. We're expecting our pair to start rising anywhere between now and 925. Keep in mind the 925. I'm going to dive into this very soon. The reason we believe our pair might drop down to 925, it sits at our trend line at the top of our orange zone. We're expecting our pair to start rising up to the market price of 6995, which is going to be our TP for this trade, totaling of 70 pips. We could see our pair break through this resistance zone of 6995 and rise up to 7025, which is going to be our second TP for those wanting to hold this trade for a little bit longer. So this was the call that was sent in the group chat. We'll jump on the charts in a second. I'm going to go through the calls that were made. Not long after we had this call, this other trade update, should I say, short-term traders at 25 pips running, close half your trade and put your stop to your entry. So not long after this trade was sent out, we had this trade update sent short-term traders. So short-term traders specifically, anyone wanting to hold this trade to the TP. Unfortunately, as part of trading, we have to sit through a bit of drawdown. Not always, but unfortunately, it's most likely that we're going to have to. So as a trade update for short-term traders, for scalpers, 25 pips running, lock in some profits and run a risk-free trade. The long-term traders wanting to hold to TP may have to experience a bit of drawdown in order to get to that TP. Since that call, there was no updates for those long-term traders. Unfortunately, like I said, we'll jump into the charts in a second, but these short-term traders were stopped out at break even. Good job to anyone who jumped back in and re-entered. Let me just go through this really quickly. These are all other trades, other analysis being sent out. Here we have TP hit 70 pips, TP to 100 pips. Okay. All right, excellent. All right, let's jump into the charts. Oh, a mistake. So let me get into the charts here real quick. Let me get set up. Using the bar replay just to have a bit of a trade recap here. So at this point in time, price was 69362. This is just from the bar replay. Keeping in mind the trade was sent out at 69350. Let me just put a quick, just to keep it nice and clean. 69350. Now, let me jump back in here real quick. From here, we're expecting our pair to start rising anywhere between now or to a market price of 0.6925. Now, let me mark up that really quickly. 25. All right, there we go. Now, what I'm going to do is I'm going to let this go, and we're going to watch what happens from here. Price comes down, hits our 925 mark, instant rejection, which I will dive into the minute and 5 minute chart after this. By this stage, the short-term traders were already told to close half at 25 pips, run a risk-free trade. Trade is still running. It is still live. I believe around this time, this was the close of Friday night, Saturday morning for some traders. So this is now the weekend. Now jump back into Monday, Sunday night, Monday. Still running. Trade is still running. Big movements to the upside. This is on an hour chart. We've had 1, 2, 3, 4, 5, 6, 7 big bullish candles. And here we came close to our TP, 3 pips off TP. Big drop, big drop. Unfortunately, this is where the scalpers might have been taken out. It does drop back into that orange zone for a brief moment, which we will see in a second. There we go. So unfortunately, that's where traders got taken out. Those scalpers that were still holding through over the weekend got taken out. Those long-term traders, however, were never updated to set to break even. While you could adjust your stop loss following the calls, traders weren't advised to do that. Those traders who followed the calls, still in this trade, coming back to TP. There's our first TP hit, and just like that, that TP2 was hit at that top green zone. So there we have it. That was the trade. Yes, I do want to exit out of this now. Let me go back in and recap this. So let me drop down to the lower time frames. I'll jump down to a 5-minute chart, and we're here from the arrow. Okay, so let's jump in. Where's my second arrow? Okay, I'll put another one in. 3, 5. Just like that. Now, as I talk over this 5-minute chart, I'll jump into the minute chart as well, just to give very, very specific details on this trade. Keeping in mind, the original call was sent at 6935. This white line, this white zone here, mentioning anywhere from 350 to 250. Now, I want to drop down to the 1-minute chart right now, except I have to find, here we go. Okay, now 250, our bottom white line. I would just like to point out the accuracy on this call. We're on a 1-minute chart right now. Mentioned 250. I'll take the green from the bottom of this wick, because we can see that there is a little bit of movement here, just to pinpoint the accuracy on this call. 250. The lowest it came was 69239. That is 1 pip drawdown. 1. I would just like to be very clear of the accuracy of this call. The reason we believe our pair may drop down to 9250 sits at our trend line at the top of our orange zone. We're expecting our pair to rise up to our TP. Guys, the call was sent out at the market price, sorry, my mistake, of 9350, around here, advising of a potential drop to the 250. Buyers who entered at 250 experienced 1 pip drawdown. Guys, it does not get any better than that. So let me jump back onto the high time frames. I'll jump back onto the hourly. Okay, now reasons for the buy. Reasons for the buy. Let me jump into this. Sorry, I'm a bit all over the place at the moment. I'll jump back into the call. Sitting at our trend line at the top of the orange zone. So obviously our charts are already marked up. So the reasons for the buy off this obviously mentioned the orange zone, which we can see where we've been met with support and resistance. It's an area of liquidity that draws price to. Price is drawn to these areas. Now keep in mind that we also not only have this region, but we also have this base trend line that we're working off as well. I'm going to jump into the trend line in a second. First of all, we have this region, prices coming down, which we can expect from previous performance. We've been met with rejection. Okay, as we come down, we're met with rejection. We're jumping in for buys, but to solidify our bullish bias on this call is this trend line, is this channel. So if I zoom right out, I just want to show you how far this trend line goes. This trend line began in April, mid-April. This trend line began. We can see price. This is where the trend line was formed, the channel. What I'm going to do actually, I'm going to do something real quick. I'm just going to pinpoint here all of these trend line touches where price was met and rejected, whoa, off this region, just to make it a little bit more clearer for you guys. Okay, so here we go. There we go. And once again, even after the call, I'm going to throw that on there too. Oh my gosh. Okay. So we were met with a breakthrough, bit of retest, formed this here. Okay. Yep. Okay, so our trend line begins. At this point, there is no trend line. This is the first point. At this current price in time, there is no trend line. We have nothing to work with here. However, after we have a base, and then we have our second touch on this trend line. Now, still at this point, this trend line is not confirmed. However, once we're met with a few more data that we can look back on, we can see that this price is being drawn to this area, to this trend line. What we can expect in the future is rejection. See, we were only met with one rejection from the upside, whereas we were met with 1, 2, 3 points off the base. On our second touch on this potential trend line on the upper side of this channel, it broke through. So this trend line on the channel, we could say that this is potentially not as strong as the base of this channel. We had some movements, some higher movements. We could go back in data to analyze where, what this region, this price region is, what's the importance of it. However, we came back into the channel, had another breakthrough, held through, came back into the channel. Now we did come and we touched on here, came down, and we've had another rejection off this base. We can see a bit of a support line through here, and then of course as we jump in, as I open this up a little bit more, we can see now here we're being met with resistance off this level. As we're coming down, as price is coming down into the base of our channel, of our trend line, we're taking buys. We have a lot of data, a lot of reasons to believe that the base of this trend line is holding, is valid. The top of this channel, not so much. However, price did come back into the channel, was rejected once again. However, like I said, we have had a lot of data, a lot of history, a lot of reasoning to believe that the base of this channel is much more powerful than the upside of this channel. Price has come down, we've taken buys. Reasons for our take profit to these two zones: first TP, this first green zone here, triple top, 1, 2, we're expecting a third top here, a region. Again, this is a region where price is being drawn to. We've had one rejection, we've had two rejections. We're expecting our first TP that we're expecting price to come to, is being drawn into this zone, which we can take profit. We can take profits off the table, and from here price can either continue or reject, as it has done twice previously. We came close here, right here we came very close, and that could be our triple top here. Price was rejected, came down back to our channel, the base of our channel, back into the orange zone, rejected once again, and finally our two TPs were hit. Reasons for the second TP: rejections off a zone over here, even coming to the top wicks. We can see on the left side over here, this wick fishing region, as I would like to call. And so there we have it, guys. Another quick trade recap. Aussie dollar, 70 pips. As mentioned before, unfortunately those scalpers, the short-term traders, were stopped out at break even. However, the long-term traders that were following along, that did not adjust their stop as advised, as I should say, weren't advised. TP was hit for 70 pips with a further push upside to that TP too. So once again, great trade, 70 to 90 pips, locked and loaded, easy done. I would just like to quickly say thank you very much for everyone who is taking the time to watch these videos, support us on Instagram, support us on YouTube. We really appreciate all of the views, all of the kind words, and we do this for you guys. We are here to help you, we're here to educate you, and from myself and the team, we would just like to say thank you. Okay, so that's it from me on this one. Aussie dollar, 70 to 90 pips. Thank you everyone once again for supporting us. We do really appreciate it from the bottom of our hearts. So another quick trade recap brought to you, and we'll see you in the next video.